Brian and Wes here at the Trading Post. We're going to talk silver today. Since the price has doubled in the last 2 months, we've had a lot of people trying to sell their silver. Had a lot of people getting irritated that I won't pay spot price. I'd like to explain how we get where we go on pricing. May not be the right way, it's not the only way, it's just how we do it. I am a pawn shop that sells bullion because I like it. I buy some myself. I am not a coin shop. So, Wes, tell me about what we got out here.
Yes, we got a couple different things. So right here in your hand, he's got a 5-ounce bar. Now we here at the Trading Post, we go off the COMEX live pricing. That's going to be different than the spot price you're going to see on the big websites like AppMex, SD Bullion. For example, right now at the time of filming on COMEX, spot is $63.80. If you get on JM Bullion, it's $64.01. So there's about a 20-25 cent spread there. So here at the Trading Post, when we do spot, we go off COMEX.
Now, when people call, they always want spot price. And there is a little discrepancy on what site you're using and what that is. Nobody that I know of pays spot pricing. First place, everybody's in business to make a profit. I can't pay spot and sell it at spot or a couple dollars over. One of the largest silver companies in the state that's been around for decades, 40, 50 years plus, they're $4 behind spot on silver rounds. They're $8 behind on junk silver. And when I say junk silver, I'm talking about pre-64, dimes, quarters, halves, etc.
That'd be the 90% stuff.
Correct. Because what we're finding out now that the price has doubled and everybody's wanting to sell because they bought 2 years ago at what, $25?
25, 28.
And it's now pushing 60 plus. The refiners have stopped buying because they are so backed up. And they're now paying $4 and $5 behind spot because of the investment they have. I have a friend that has $2+ million sitting at a refiner, been there for almost 2 months waiting for them to get to it. Now, fortunately for him, the prices kept going up, so he's actually going to come out better, but that is one of the risks you take.
With all the prices going up, the prices on these websites have changed. Used to on these websites, you get on and if you bought, let's say 50 rounds plus, you could get it at spot price. That is not happening today. For example, on our 5-ounce bar here, what do we have that priced at, Brian?
$3.20.
$3.20. So if you get on AppMex right now, that exact same bar is $3.42. Ours is coming in right at spot price. You're shelling out well over $300 on these major websites and you're not even getting spot price. Money!
Let's go to these Silver Eagles. I've got 2 Silver Eagles here. One's at $61.99. One's at $64.99. And
It's got the paperwork and stuff.
That, and I bought these today that the price went up on. This I bought 3 or 4 days ago. I don't come in here every day and change my prices because it went up 50 cents. I don't come in and change them because it dropped 50 cents.
Ain't nobody got time for that.
If you was on one of the sites, what are they selling Eagles at?
So as of today, if you were to get on AppMex, you're looking at $72 for a random year. And that does not include shipping. You got to spend $200, $250 just to get free shipping.
So when I'm buying silver, honestly, when silver was $15, $20, $25, wasn't a big deal for me to pay them $25 and make $2. I done it because I enjoyed it. I buy a lot of them. It was just kind of a side hustle and it was fun.
It's fun.
Now that silver's $64, from a business perspective, I can't make $2 when I invest $64. I have overhead, I have employees that have to stand there and buy it. We have to pull it, put it in inventory, we have to put it in a case, I have to pay someone to sell it to you. If I can't make $4 or $5, I'm not gonna mess with it. And even at that, that's not making any real money. It's just, like there again, I like to do it. The first week it went up, I think I bought, 500 ounces. I think I put out, $25,000, $28,000 that week on silver. And at some point, since I'm playing the market, I just can't afford to do that because they're driving the market $1, $2, $3 a day. And if I cut it that tight, I may be underwater tomorrow.
Underwater.
I don't know if you remember a year and a half ago, if anybody follows the oil market, they run oil to minus $40 per barrel. They could do the same thing with these with the paper contracts. That is one reason I keep a little bit of spread in there. I apologize to people who get irritated. They think I'm cutting them a little short, but those are a lot of the reasons why we price backwards a little bit. There again, it may not be the correct way. It's definitely not the only way. If I was nothing but a coin shop, I might do it different. But I'm a pawn shop that sells coins because I enjoy it. And I do have to make a few dollars. We do have a lot of guys, we sell a lot of it. And I've had guys tell me, well, we know you're not the place to sell it, but we love buying from you. I can't pay spot and sell it under spot. Those are really good deals, and even those at that $64.99 setting really tight to spot. Most of my stuff I'm going to sell within $1 or $2 of spot. I'm not going to jack the price way up. And so that is kind of how I get the pricing we get.
Yep, and if you bought in a year ago at 25, 28 an ounce.
Yep.
And you come in here and we might not pay you $63.80, but if we pay you $55, $58, you're still doubling your money from what you paid a year ago.
Mm-hmm.
So if you do have a bunch, come on down and see us.
We're going to be behind spot a little bit. We're upfront about that. Like I say, that some of the largest buyers in the state, they're $4 and $5 behind also, for the same reasons that I'm explaining today. I hope that clarifies it a little bit, but that is why we are where we are. And we do appreciate everybody. Stop in, talk to us about it. We'll be happy to walk you through what we do. So
absolutely,
we appreciate it.
Yep.